Hello there, this is FairBinaryOptions.com, and we are continuing our Binary Options Academy and extended it with one more project. And in the series of how to trade, we are looking to offer you some tips and tricks on how to trade this time the US dollar and the Japanese yen, as you can see on the screen in front of you. Now, US dollar and the Japanese yen is definitely one of the most traded currency pair of them all, as represents two major economies. The biggest economy in the world, the US economy, of course, and the Japanese economy, the third economy in the world when it comes to the size of it. Now, the US dollar Japanese yen, it is also extremely tricky because it is highly correlated with the equity market. So the first thing to consider when trading the US dollar Japanese yen, the fact that it is highly correlated with US equity markets, and not only with US equity markets, but with in general equity markets in the world, as algorithms and robots and so are effectively influencing how US dollar Japanese yen it is moving. Now, monetary policy and economic data also moves equities, and that should matter the most for the US dollar Japanese yen, even if, let's say, economic news are not necessarily out of Japan. So not only news out of Japan moves it, but every piece of news that moves the equity markets moves the US dollar Japanese yen as well. Now lately, if you go on the, let's try to go on the bigger time frame, on the weekly and monthly chart, lately the pair rose virtually from almost vertical from 0.75 level all the way to current 121. And the reason for that was a massive, but absolutely massive quantitative easing program that is being run in Japan. And you have to imagine the dynamics of this program, because in Japan they are running a quantitative easing program that was double the size of the one in the United States, and actually applied on a 3 times smaller economy. So you can imagine the dynamics on that country, and this is why the Japanese yen depreciated significantly. So equity markets in the meantime went to the roof, and of course the correlation. What matters the most, so highly correlated with the equity market, of course it is highly dependent, so on the second one here, highly dependent on US and the Japan monetary policy. The two paths now, or the two central banks now, are on different paths, in the sense that in Japan we're looking for continuing easing, while in US the Federal Reserve is preparing to hike the rates. What does it mean, preparing to hike the rates? It means that already they stopped they started with tapering the quantitative easing program, then with ending the quantitative easing program, and now they are willing to change the forward guidance. And changing the forward guidance means another step in the tightening of the monetary policies, and therefore a higher US dollar is all over the board. Now, besides these monetary policies and equity markets, in US, for example, the Federal Reserve of the United States, it is meeting every 6 weeks with a regular meeting, and in between every 3 weeks we have the minutes, basically having an idea what those guys discussed at the FOMC. And in Japan is on a monthly basis, of course. In Japan, the economic data out of Japan lately matters only in terms of the CPI, or the inflation, and of course the now famous Tenkan report, or Tankan report actually. This Tankan report in Japan is a report that reflects the state of the whole economy, and basically you know if the economy is in recession or in expansionary territory by looking at the Tankan. Central Bank or Bank of Japan is highly influenced by the Tankan report. Now stay tuned for the second part to find out how to integrate US data into this puzzle, and to go a bit over the economic calendar to try to find out what are the important news for Japan and the US in order to make the US dollar and Japanese yen moving.